All of us here in the studio, as travel is picking up post the pandemic, the industry has seen occupancy levels rise across the board. Revenue per available room has also seen a 7% increase versus the pre-COVID levels. To understand the outlook and what the festive season demand is looking like, we're joined by Patanjali Keswani, the chairman and managing director at Tree Hotels, and Devendra Parulekar, who's the founder at SaffronStays, joining us as well. Gentlemen, morning to both of you. Mr. Keswani, I want to start with you. First, before we talk about your own numbers, which you recently reported, there are a slew of weddings now taking place across the country. This is by far the biggest wedding season we've seen, at least in the last 2 to 3 years. Corporate demand has come back in a big way. Going forward, what kind of occupancy levels do you see? And are there outsized gains that the hotel industry is looking at?
Good morning, Sonia. Now, you see, the wedding season and weddings themselves do not necessarily add a lot of, occupancy or room demand to hotels in big cities. They typically add value to destinations. So, for example, I was in Udaipur yesterday. I have a hotel there, and there I was told that we have 7 or 8 wedding bookings, which have a big impact for that hotel, because these bookings typically, they buy the whole hotel out. So wedding season, good for certain types of hotels and good for banquets and banquet income for even city hotels. But it will not materially move the needle. In fact, the festive season, I see everybody reports that it's a time for increasing occupancies. That's not true. Actually, it's quite the reverse. During festive season, it is the occupancies of specific destinations that go up, but mostly business hotels and many leisure destinations, the occupancies take a big hit because people do not travel necessarily during Diwali and Dussehra. But November and December is looking fantastic from every perspective, whether it's the wedding season you talked about or general business demand. So I definitely see in H2, we will exceed what H2 was in the last normal year pre-COVID, which was, I think, the occupancy was about 70%, 71%. I think it'll cross that. So that's the good news. And prices, of course, are at least 20% up over pre-COVID. So overall, you refer to RevPAR. I think RevPAR should be 20% over pre-COVID. And prices, costs will be down for all large listed players. So overall, EBITDA should be much, much, much better in H2 this year.
Okay, all right. Hi, Mr. Keswani. I wanted your response to this fact that homestays suddenly are becoming very, very popular. Do you think there is enough for everyone to enjoy? That's you guys, the hotels, the homestays as well. Or will it come to a point where the homestays start eating into your share?
Well, I do think homestays have affected us in specific markets like Goa. But on an aggregate basis across, we are in 52 cities. They have not really materially moved the needle. But Goa, I can definitely see the impact, not only for us, but for hotels in general, that many people are preferring to go to homestays.
In fact, we have Devendra Parulekar, who is the founder of SaffronStays, and SaffronStays has a network of over 250 plus homes. Devendra, good morning and thanks for joining us. Your view on, the comment that my colleague was making about how the possibility of homestays eating into the market share of hoteliers, is there any fact to corroborate that? And how do you see demand shaping up as we head into, the end of the year? There's also the wedding season.
Morning, Sonia. Morning, Patu. Firstly, I think this is a misnomer that the homestays are eating into the hotel industry's market. I think there's enough and more space for everybody. The demand and the structural changes that have happened in the demand are so positive for the entire industry, and the buoyancy of that demand is so so heartwarming that I don't think any of the segments should be worried. I think even the same individual would book a hotel when he or she is booking for himself or his own family, immediate family. But the pattern of the demand changes when it's a large group or when it's a family of 6 or 7 or friends of 10 friends are going together. Then they tend to book a villa because their requirement for privacy goes up. But again, when the group size increases beyond 20, it's back to the hotels, because the kind of infrastructure, the kind of size that is required to cater to a large group, only a hotel can do it. So there is a sweet spot of anywhere between 6 to 16 members in which villas and homestays really rule. But beyond that, I think below and after that, it's hotels which kind of rule the roost. So honestly, there is no competition. I think it's coexistence. I think large mainstream hospitality industry has also realized that they need to complete that part of the portfolio, and hence are building out their arms in homestays and villa rentals. Having said that, back to the point of demand, I think we've not seen a fantastic November. And we were surprised by that. Post Diwali, we actually saw a small dip. But the month of December has been a surprising packet. Unlike every year where decisions have been taken closer to the New Year's Eve or the Christmas Eve, where bookings actually picked up in the second and the third week of December, this year, for the first time, I'm seeing bookings for December having been done in October, November itself. Right? So a lot of advance booking. And one of the reasons is very, very high flight tickets. If you notice, if you try and book something for anywhere to fly anywhere, tickets are really, really sky high. And that's actually prompted people to do a lot of advance bookings. So a lot of our super premium, luxury, ultra lux homes are booked out, from the Christmas Eve right down to the first week of Jan. And there's barely any inventory left. And now our focus is to fill up the rest of the month of December.
Sure.
Good morning, guys. Deven was, I can tell you, was partying till late night yesterday. Deven, amazing, you're back chirpy in the morning. Full disclosure, Deven is a neighbor, and he's also an avid tennis player and tennis partner as well.
Were you at the same party?
We've not caught up on the court for a long time. But
were you at the
no,
same
I was
party?
not. But I know.
Deven, keep us informed. Sometimes Prashant doesn't turn up.
So both of you have turned up this morning, not bad.
No, but Deven, when is the IPO coming? Now let me ask you that on TV.
You're embarrassing me. My investors are asking me the same question. So I think it's IPO is just a journey, right? I mean, it's not the destination. I think the larger the dream and the legacy that we want to build out is, I think, to change the way Indians as groups travel within the country. There aren't too many options available for a family of 4, family of 8, family of 10 beyond hotels pan India. There are scattered stays. But I think, the consistency and the standardization of experience and quality and the certainty that hotels give, the comfort, the, luxury quotient that hotels give, I think that's something that we're trying to solve structurally in the homestays and the vacation rental space.
Deven, also, you were talking about how November is not shaped up as well as perhaps what you expected. Is it not just because of flight prices which are escalating, but also because there's a lot of competition now? There's Stay Vista, Airbnb, of course, Taj has their AMA stays. So this space is getting very cluttered.
Oh, not at all. In fact, if I say this very clearly, I think there's a gross undersupply in this space right now. I don't think it's competition. It's clearly a small structural dip because groups tend to decide in a very different manner. Unlike individuals who pick up, take the car and just drive out. The decisions are literally last minute, and hence occupancy even fills up towards the end of the week. For groupthink, people have to align their holidays. People have to ensure that they take their decisions a little in advance. And hence, when you have a Diwali coming in the last week of October, and when you have a super holiday season happening in December, November would see a dip. And this is normal. We see this. Last year, Diwali was in November, hence November was good. And I'm just doing a month-on-month comparison, and hence, and founders are never happy with the numbers, right? So, yeah, we're forever wanting a 5 to 7% increase month-on-month. And that's just gone into our DNA. If it doesn't happen, then we complain.
Founders are not happy, investors are not happy, shareholders are not happy. The list is endless, right? But Mr. Keswani...
as long as the guest is happy, right? So, Sonia, as long as somebody's problem is solving, and as long as the homeowner is happy that his asset which was lying idle is actually being monetized. I think the journey is just a beautiful journey for us.
Okay, but I want some numbers, right? Mr. Keswani, you mentioned that the growth will be quite good this year. Would you change your outlook for FY23 in any way? Because the revenues are expected to be more than double perhaps compared to what you did last year. Both for FY23 and FY24, where do you see the business?
You're talking about the hotel industry or Lemon Tree?
You can give me both. First, of course, for Lemon Tree, but for the hotel industry as well, your view?
Well, I think that, H2 will be very good. I've said it publicly, we'll cross, in the owned portfolio, we'll cross 800 crores, of which at least 400 crores will be our EBITDA, net EBITDA. But in our managed portfolio, we should do another 500-600 crores. And we get about 7% of that. So we should do fee income of about 35 crores. So that's roughly the numbers I would look at. Next year, I think will be much, much better because finally corporate demand will be fully up to pre-COVID levels. So next year, I would reckon it should be at least 15% better in terms of revenue. And therefore, 30% better in terms of EBITDA.
All right. Mr. Keswani, what about the debt number? Where is that one headed?
Our debt is not significant in the sense that with 6,000 owned rooms now, having 1,800 crores of debt is basically 30 lakhs a key, which is like 25% of your asset value. So it's absolutely not an issue. In fact, you keep asking me about debt, which I find amusing, but nobody else does. So
we're here for the shareholders. We need to ask you the question.
But
we ask you on your revenues.
I'm saying the shareholders never ask me.
Maybe they put that question to us as well. So, good to see that business is shaping up. You're confident about FY23, Mr. Keswani, and you're very optimistic about FY24. And we'll keep bringing the questions in. And we're glad that you're taking most of them head on.
So there's one more, piece of the system that's unhappy, the anchors, right? The shareholders, the investors, the promoters want more, and now the anchors want more as well.
Anchors want lower room rates and lower homestay rates, so they can party.
Even consumers want lower homestay rates, I can assure you that. Devendra, you were saying something?
Yeah, no, I mean, the anchors are more than welcome. They're all friends, right? So welcome, come and stay with us.
And Devendra, we're waiting for you to list. Then it's game on, I think so. The journey gets a little bit more tricky, maybe. But thanks, gentlemen, for joining in and giving us your quick take. It's been good speaking to you all. Well, as we had that conversation, keep an eye out on the Nifty. We were talking about this buy on dips theme. Well, that's precisely what's happened. The Nifty has moved into the green after starting off with a cut of around 60-65 points. Slip into a short break on the other side. Manisha Gupta is waiting for us. She'll tell us about the commodity space, and we'll get Mitesh back in as well to give us a quick call on the index.